Hi, I'm David Bodemer, the Editorial Director with National Real Estate Investor. We're here at ICSC Recon 2012, here with Michael Schwartz, who's a principal with McGladrey LLP. Thank you for stopping by.
Thanks for having me, David.
Sure. We talked last year, and so that was a good chance for us to kind of catch up, and I think it'll be a good chance to see, what you're seeing about the mood this year versus last year.
The mood this year, last year we talked about how last year versus the year before was comparing potato chips to shrimp cocktails at the reception, and this year the mood is equally as exciting as it was last year. People have a very good outlook. Things this year have really taken place in terms of the transaction side of things. We're seeing a lot of acquisitions, seeing a lot of deals, a lot of lease deals coming up. The booths are just packed. I mean, yesterday morning it was every booth you walk by, everybody was doing some deals, and you're talking about people. Last year it was kind of an interesting coming out of the 2009-2010 recession, and the mood just overall is excellent.
Are the conversations that are taking place any different as well? They're more like substantial about deal making. You've seen something like that?
They are in many respects. First of all, although not necessarily say opening of any new malls, so to speak, any regional malls at least, lifestyle centers are still out there, but we're seeing a lot of acquisition activity pick up, and then a lot of redevelopment. People are focusing on that. The transactions are happening. Cap rates over a year ago are going down. I was meeting with one client this morning who told me in a southern town where a mall recently traded hands for a 4.5 cap rate, and this is just incredible. But you know what? The market's justifying that too. We're talking about, from a lease standpoint, we're seeing a number of leases coming due, and the tenants are being squeezed now a little bit more. 3-4 years ago, and even last year, it was still somewhat of a tenant market. Tenants could kind of command where they wanted to go. You're seeing a lot of, from a negotiation standpoint, potential termination rights come to play. And this year, they're not getting their way as much. So rents are starting to creep up, and it's a good thing all the way around, because even when rents creep up, tenants will pay ultimately. Sales will then go up to justify it, and things are looking good.
So you talked a couple times about the transactions being the pace of transactions being higher. Could you talk a little bit more in depth about that, and maybe like the quality of the transactions as well? Is it, for a long time we were always talking about like predominantly just the best assets trading, so is that moving at all?
Yes, it is moving, and that's a real good question, because what we're seeing is a year ago and 2 years ago we were talking about distressed, and distressed was the key word, and that really got to be almost overused, and now we're not seeing as much distress. In fact, I ran into somebody who was doing distress, and they're a little concerned now. They're slowing down on that end. So what we're seeing now is actually some better product coming onto the market. Tenancies of about 85 to 90%, and even better, that are out there. You're still seeing a number of people chasing a lot of the same deals, so that is driving cap rates down. And you're also seeing a lot of one-offs, a lot of one-off restaurants here. I think when 08, 09, when we were going into this, the downturn, a lot of restaurants were closing, and people repositioned themselves in that area. What you're seeing now is an uptick, and a lot of one-off folks are doing it. People that were involved even in a couple of our clients in the acquisition side of power centers and grocery acre centers are buying these one-off restaurants in various markets, and it's definitely picking up.
So, and one thing that's always interesting about ICSC is we're not quite halfway through the year, but we're pretty close. So it's sort of a good time to kind of like assess where we are, and then and think about how we're going to get through the end of the year. So what are your thoughts on that?
That's another great question, David. Last year it was kind of a cautious optimism. People were still, maybe it's still a little trepidatious, watching their P's and Q's, as they say. And this year, I think it's a genuine optimism. I think as people get through, got through the first, as you say, almost halfway or beyond halfway through the second quarter,
right.
A lot of activity that we've probably seen more activity in the first 5 months of this year than we did in definitely the first 9 months of last year. Fourth quarter is always busy from our end and from our client standpoint. But a lot of optimism in different markets too. Markets that were a year ago people were staying away from. The Carolinas are coming back now. DC area has always been hot. Even in the desert Southwest, Phoenix really had its problems, and they still do in the residential side of things. Phoenix is we did a number of transactions earlier this year in the Phoenix area for some clients, and it's definitely a positive optimism. And I think as we get through the rest of the year, we're going to see some deals, some transactions hit, and on the leasing side, you're going to see some nice 5, 10 to 20-year leases, depending on the marketplace. I mean, I think a lot of the Borders, the Borders bankruptcy last year, a lot of those locations have changed hands, and you're definitely seeing a good outlook. So I think as we get through the rest of the year, everybody's walking around with smiles on their faces, and I think we're going to have a very positive rest of 2012.
Great. Well, thank you so much for coming by.
Thanks for having me again, and look forward to the rest of the show and the rest of the great 2012.
Sure. And thanks for watching this video, and please make sure to tune into in our series from Recon.